All right, we are back for another Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing well, man. How are you?
I'm doing well. It's the mid-May. This is for May the 19th, 2023. It definitely feels like summer. The warm weather's here. Definitely feels like a lot going on. I'm very curious to know. I've got my pray hat on because I'm praying for inventory.
I like it. I like it.
But let's get into the show. Let's talk about retail sales this week. What did you see? What are your thoughts?
Yeah. So the big number, the big economic for the week was going to be retail sales. We'll catch people up what it was last month, what was expected, then what it was. So last month, retail sales disappointed, was down -1%. So quite a move for retail sales. Really, the consumer was scared, pulling back. This month, there was expected to be a pretty decent snapback. They was expected to be up 0.8%. It disappointed. It came in at only 0.4%. The other thing we must always remember, and we've talked about this a lot, we'll do it again, and we'll probably do it a lot more times. There are some economic numbers that are nominal and some that are real. What do I mean by that? There are some that are inflation adjusted and some are not. So what was retail sales? It is a nominal number. It was up 0.4% month on month. Why is that important? Well, if you look at CPI, it was up 0.4% month on month. So if you want to turn, generally speaking, retail sales from a nominal to a real number, they were actually up 0, right? Take +4, -4, you get 0. And really, retail sales were up, but they were up because of inflation, not real growth. So again, I think retail sales disappointed. We've heard from Walmart this morning that people are buying groceries, not electronics. Target disappointed. So again, generally speaking, not very good on the retail sales front.
Very interesting. Very interesting things you've been talking about for months and months. And we're obviously seeing it's starting to come to fruition. Let's talk about existing home sales. Your thoughts this week. What did you see? Anything different?
Yeah. So existing home sales, again, this a lot of real estate agents watch this channel. So let's kind of just catch everybody up. We come into the year, I call a bottom at 4 million, right? I think we get 4 million in February. It then spikes in March to 4.4. I think a lot of real estate agents mistakenly thought we're off to the races. I tried to warn you. I just be careful. Then it came down to like 4.3 or something. That was the expectations for this month. I actually thought, unlike the last 3, that was a decent guess by the experts, because I've been hammering the experts. You're wrong, you're wrong, you're wrong. And thankfully all year I've been a lot closer than them. I said 4.3 was a good number, but I would take the under slightly. And I said, I'm thinking 4.28. So pretty close. And lo and behold, the number came in this morning at exactly 4.28 million. So the last few months I've been within 1%. This number I nailed. So existing home sales 4.28. What does that mean? For the agents and mortgage brokers, it's tough out there, right? We're not doing 6.5 million. We're doing 4.2, 4.3. And I don't have good news for you, right? Praying for inventory. Sorry, bud. Yeah, just keep at it. He's listening, but he's going to have to listen longer, unfortunately.
Yeah, it's interesting that spot on. I mean, we're losing basically about a third of the transactions. That was true last year. It's consistent. It's going to be true this year too. That's still the thought going forward, correct?
Yeah, I think we're bottom. I think we bottomed at 4. I called it early. I haven't changed my opinion. There's just enough stuff going on that 4 million transactions, 4.2, 4.3 will happen. But if you're here hoping and praying that we go to 5.5 or 6, you got to change your business. You got to change your expense structure. You got to do something. You got to manage your months of life, what Brian Lebo calls it. You got to watch your bills. This is about surviving. There's actually something in commercial that people are saying that I think a real estate agent should think about, and that's survive to 25. Operate with that mindset. Survive to 25, because there will be another boom cycle, but if you're not around to see it, right? So again, maybe it's a hard thing to hear, but thankfully we've been calling it. Thankfully we've been right. So hopefully people are taking action.
100%. Also, too, just to clarify, when I say pray for inventory, I'm talking about for our teams, for our community. We want to dominate when everybody else is contracting and hiding. Yeah. We want to get out there and really, take market share. So just clarify.
If that's what we're talking about, I think you have a good opportunity because, again, there are more and more notes out about a bad time to buy this, that, the other, people pulling back. I've been doing this a long time. And I could tell you the average buyer is pulling back. Yep. And what I do when they pull back is I go I jump in. So that is going to be answered. That prayer will be answered.
And we'll talk more about that at the end. We'll talk about opportunities at the very end because there is so much opportunity in a shifting market like this. Let's continue. Home Depot, you had a big thought, news about Home Depot and some announcements, earnings, things of that nature. Talk about Home Depot this week.
Yeah, again, one of the things that I look for, because, obviously I study real estate, macroeconomics, there are these companies that are like light towers or lighthouses in the ocean. And two of them reported this week, Walmart and Home Depot. Walmart tells me, are we going into a recession or not? Because what happens, again, historically, not right or wrong, it just happens, is people trade down. So going into a recession, Walmart does really well. So what happened today? They announced on Thursday. Same store sales up 5%. Beat top line, beat bottom line, raise guidance. So again, if you like Walmart, the stock, you're happy. But as an economist who knows that only happens when people trade down, you're like, warning sign. Now Home Depot. Home Depot, I think, reported Tuesday, might have been Monday, I forget. But basically, they've been a darling of the pandemic. Everybody is upgrading their house. They're changing the backyards. There's a lot of flipping going on and all of these things. And I came into the week going, I think Home Depot is going to disappoint. Because, again, we've seen all these transactions stop. We've seen all of these, like everything is slowing down. And sure enough, Home Depot had one of the worst earnings announcements I've seen any retailer have, maybe other than Gap. Gap has had some just atrocious earnings over the last year. But Home Depot's report was no bueno. It was not good. And I think it validates that housing is going to stay slow. It's one of those lighthouse companies that I look at. So it was not a great report. And I didn't, one of the things that could have happened is they could have had a great report. And then I'd be like, you know what? Maybe the first time home buyer flippers are doing okay. But again, the report was terrible. And it was like, not good, not good.
Very interesting times. Obviously, we love that all the research, the expectations, things you've been talking about, again, all coming to fruition. Let's shift gears for a moment. Let's talk about the Fed. 25 basis points was the last move early in the month. You had been calling that for months and months and months. You've been nailing in terms of what the Fed was going to do. This week, your thoughts about Fed talking tough. What is that about?
Yeah. So one of the things that I said at the last Fed meeting, I think we talked about it on the weekly one, is I wanted Jerome Powell to be tougher. I felt that Jerome Powell put a pause on the table, which caused the market to price it in. And, we are where we are. On Wednesday, or at least I read it Thursday morning, I think it came out late Wednesday evening, Fed president for Dallas came out and said that economic data that I am seeing today, we will be raising rates in June. That is talking tough. I believe more Fed presidents should talk tough going into June because the market can get ahead of you. I still believe and will not change my mind. I won't change it. I think a pause is coming in June. But I think the Fed should talk tough so the market doesn't expect it. And the pause is really meaningful. But yeah, the Fed is starting to talk tough. Inflation stickier longer. The Fed is saying no cuts. The market is still saying 3 cuts. But I was pleased. I forget her name. I apologize. But yeah, she's Fed president for Dallas, is talking tough. So good for her.
Interesting. Very interesting. And again, something we'll continue to keep an eye on. Let's shift gears to commercial real estate and commercial pain. Your thoughts there?
Yeah, it's there are going to be some assets that trade at remarkable value. So you and I happen to live near San Francisco, generally speaking. There was an asset long rumored to be traded at 80% off 350 California Street, downtown near Market. and it just traded at 73%. So it is now traded, is now a comp, to use an appraiser term. It is now price discovery. So we now know that San Francisco office that's high vacancies is going to trade at a hefty discount. We have a comp. So that's going to cause all kinds of ripples. That could cause banks to reevaluate their assets. It could cause them to extend and pretend. It could cause all kinds of things. But we are now seeing price discovery. Up until this traded, we had price opinions. Now we have price discovery. It's something that appraisers could use. It's no longer price opinions. It's an actual sale in a comp. So 350 California is going to be a watershed moment for banks. Will they evaluate their loan book? Will they extend and pretend? We now know what it trades at. And San Francisco office real estate that's 75% vacant trades at a 73% discount. So watershed moment. Pretty crazy.
Such a wild time in commercial real estate. And I mean, again, you've been talking about this. I feel like the last 6 months, 9 months, for a long, long time. I know on other expert series, you guys talk a lot about commercial with, I believe it's, who's the expert? Darren?
Jonathan Twomley.
Jonathan Twomley. Also very interesting and bizarre. I read a headline today, Sam Zell. Who is Sam Zell? He passed away recently. He was the king of office space. Describe Sam Zell for the audience, those that don't know who he is.
Yeah, so Sam Zell is an amazing investor, specifically real estate investor. So I've actually talked about Sam Zell probably a dozen times on my channel because he became a billionaire because of the S&L crisis. Right. And if you follow my channel, I think what we're going through in the commercial banking sector is akin to that. And Sam Zell built up one of the largest portfolios of office. His nickname was the Grave Dancer. So talk about a guy who bought distressed asset, right? That was his nickname. So he went on to great fortunes. I mean, he started his career doing student housing. And his career in investing is legendary. He has a book, I think it's called Am I Being Too Subtle? He is a very colorful character. He's full of cuss words, so he's not for everyone. I always love Sam Zell because he just doesn't care. You ask him a question, he gives your opinion. He doesn't make it PC. He doesn't tune it for, what the asker is looking for. He's just like, hey, you asked, I answered. So we lost a legend on Thursday, I believe. And yeah, I mean, I just saw an interview with him like 4 weeks ago. He was getting ready. And I talked about it on my daily financial news. I'm like, Sam Zell, the interview, I remember he asked him, are you buying anything yet? And Sam looked at him like, you idiot. What are you, stupid? Right? We've got years ahead of us, right? The time will come, but it's not now. And I just remember his face was like, are you kidding me? So yeah, Sam Zell passing is, I would, if you don't know who Sam Zell is, Zell, do yourself a favor. Go look him up on Wikipedia or wherever your choice is. He had an amazing career in real estate investing and someone who I think did it the right way. And then lastly, let's give him one more flowers. He sold his portfolio to Blackstone at the peak of the market. He cashed out at the peak in the last crisis. So Sam Zell deserves his flowers for when he bought and when he sold. And I'm going to miss listening to Sam Zell personally. So it's unfortunate.
For sure. Absolutely legendary. When I think of Sam, I think of opportunistic, somebody that was very keyed in to cycles and being opportunistic. I would highly encourage all the listeners. It's an audio book. You can find it on Audible. And it is Am I Being Too Subtle by Sam Zell. And it's an amazing story of a guy that starts with very little to nothing and growing up in a very modest household, immigrant family, and becoming a billionaire. And he tells it like it is. So spot on.
Oh, yeah.
Michael. So
we
good.
We lost somebody good. Yeah.
So good, Sam Zell. So let's talk about, again, what does this all mean? A lot going on. For some people, they would say it's a little this is a little down. The market, the inventory is not coming back. Let's talk about opportunity. And also, I think you need to tell people about what are we doing on Sunday? You've got an event. I'm there as a paid participant on Sunday. Talk about opportunity and then talk about your event on Sunday.
Yeah. So again, one of the things that I really work hard at is I'm a realist, right? We talk about what's really going on. I don't get too high. I don't get too low. I consume data and move forward. I want people to realize over the next 2 years, I hope people hear this. The deals done in the next 2 years will be wildly better than the last two. And some of you hear that and you don't believe me. You're wrong. The last 2 years were fueled with free money, risk-free capital, and some gambling. If you go to a casino and hit a jackpot and walk out, congrats. That's not the law of averages. The last 2 years were that. If you hit it and quit it and got out in time, you got lucky. The next 2 years are about being the good operators and the creative operators. That's the magic of the next 2 years. The last 2 years were about income. The next 2 years are about wealth. And I come to real estate for wealth. I'm not in it for the easy money, the quick this, the quick that. I want to have lifetime changing wealth. And I am more excited about the next 2 years than the last two. Now, I know some of you coming into this environment are not liking 4 million transactions. Well, we tried to tell you. You've got to make some hard choices. You have to survive to 25. That is not meant to be a downer. That at this point should be a slap across the face. Wake up. You're not being anybody's hero by running negative. Get over yourself. The team could be smaller. You could be more efficient. So you protect what you have and you can survive to 25. So nobody could ever call me a crash bro. I wouldn't think. I don't like being thought of as a negative person, but I
Never,
am
ever a crash bro. Ever.
I am opportunistic, and I am more excited about the next 2 years than the last because this is what I've been preparing for. So I'm excited. And then Sunday, I've done a lot of events for new investors. I've done a lot of events for agents, buy box, things of that nature. But on Sunday, and we only have like 20 seats left, I am pulling together a show for people that probably have a portfolio. We have 4 units. We have 5 units. I'm bringing on 4 investors that collectively have been investing for 60 years or more, 400 units or more. They're going to be regulars from one rental at a time. We're going to have the lumberjack landlord, who's an 8th grade dropout or 9th grade dropout. Dion, who came to financial freedom starting $89,000 in debt, had to move into an apartment so he could rent out his first home. We're going to bring on Millennial Mike, who house hacked and now goes out of state. And then, of course, I'll be there. This show is going to be very different than my other Sundays. All of us will be on for the full 3 hours. So if you have a question, you could get multiple opinions. The last shows I've done is like, hey, Ty's 1 hour, Beth is 1 hour. This is a show where these other 3 guys have been gracious enough to say, yeah, we'll kick it with you and the one rental at a time crew for 3 hours. So if you ever wanted to ask Dion a question, he'll be there, or Matt, or you want to get conflicting opinions, because we don't always agree and we don't have the same experience, but we got to the same point. Dion does it with 16 units. Matt and I do it recycling capital. Millennial Mike's now focused out of state in seller financing. So bring your questions, bring your portfolio. We're going to be an open book. Again, no PowerPoint, ask questions, come on camera, do comments, whatever you want. 100 people only. You got like 20 spots left. So buy your ticket. It's going to go out. It will probably sell out. So if you see this Friday morning, buy your ticket before Friday afternoon, else you're going to miss it, I think.
100%. This is a must. And I got to say, out of everything you've done with the small groups, I'm most excited about this one because of the diversity. And a couple things I'll just throw out. Some people are like low debt, never recycle capital, pay down, keep your free and clear properties free and clear. And the other guys, you guys completely respectfully disagree.
Absolutely. Certainly in the building phase. Ladder up, baby. Let's go. Yeah.
Even self-managed, hire a property manager. You're paying too much for property management. And it's beautiful that you guys all have different ways of getting there and doing different things. You're close to your assets. Other people have out-of-state assets. I am super pumped for this event. I would say for anybody there, anybody watching right now, if you're watching this, buy your ticket. It's on Eventbrite. There'll be a link in the show notes. Michael, thank you for all that you do. Can't wait to see you Sunday morning.
Got it, bud. Take care.